Good morning, my friends. Today is April 24th. So April 15 came and went, and we survived yet another tax filing season. Most individuals would have filed by the required date of April 15th. However, some persons, for one reason or the next, choose to not file on April 15th, but to delay the filing until a later period. That's not a problem. However, remember now, that person or those persons would need to apply for an automatic 6 months extension in the time to file. So remember, if you fail to file by April 15th, you need to ensure that you had applied for an extension of time to file. Not to file by April 15th and simultaneously failing to apply for that extension could cause you to have some problems, okay? Apply for an extension of time to file. Now, very important, an application for an extension of time to file your taxes is not equivalent to an extension of time to pay your tax bill if you owe taxes. Some individuals are misled to think that I file an extension for 6 months down the road and therefore I'm good to go. It's an extension in the time to file, not an extension in the time to pay. So much so that when you may not know this, but when your tax preparer is preparing this extension for you, there's a prompt. It prompts to say how much is being paid with this extension, meaning that to the extent that you owe taxes, although you're being given time to file, you're still expected to pay. And the deadline to pay your current tax bill without attracting any interest and penalty would be by the April 15 cutoff point. So again, do not confuse an extension in the time to file with an extension in the time to pay. There's no such thing as an extension in time to pay. Okay, very important. Good. Now, the thing is, once you apply for that extension, usually it's an automatic 6 months extension, all right? And so you can go until about October 15th to file. Obviously, once you apply for an extension of time to file and you do not have a tax bill, then you're good to go. You're good to go, because it means therefore that when the time comes and you do file, you're basically going to be receiving a refund. So you delaying filing your tax returns, if and where you're due a refund, is just you delaying monies that would not naturally be coming to you. So that's not a problem. If you want to let Uncle Sam continue to keep your money, get a little more interest and so on, and then you ask for it 6 months down the road, nobody's complaining about that. So once you file an extension in the time to file and you would not normally have a tax bill, you're good to go. You're just delaying the timing of you receiving your tax refund. Okay, so that is very straightforward, very simple. Now, let's spend a little more time on this extension in the time to file as compared to your requirement to pay if you have a tax bill. On the one hand, we're talking about a penalty. A penalty for late filing, as I said before, is where you did not file by April 15, you did not apply for an extension in the time to file. So there's a penalty. On the other hand, if you have a tax bill that you did not pay by April 15th, then naturally what is happening here is that you are automatically holding IRS's money that is due to be paid over to them by April 15th. You're holding it for a longer period. And so you owe this money. And on any monies owed, with the passing of time, there's going to be interest to pay. That's a cost of money. Okay, so you're keeping this money and the IRS is saying, I did not voluntarily give you a loan, right? You forcefully took a loan by not paying me my taxes. So I expect, therefore, to be collecting some compensation for being denied of this money, and therefore there's going to be interest to pay on this tax balance that is owed. Cool. Now, let's look at some figures. And first, we want to look at late filing penalty. So, remember I said before, if you file for an extension for, late filing, you apply for an extension to file later on, and you have no tax bill, then you're good. You're just delaying the time when you would normally get your tax refund. Let us, however, look at cases where you did not file by April 15th, you did not apply for an extension in the time to file, and therefore you're now going to be penalized for late filing. So you have late filing penalty. Note, your late filing penalty is going to be calculated as 5% per month on the unpaid taxes plus any interest. 5% per month. So as of April 5th, as a matter of 5% per month or any portion of a month. So it means if you should have paid by April 15th, a week later, you would have then had already accumulated some interest. So once you pass the deadline, you're going to start to pay 5% per month going forward. So it means that each month you're being hit by 5%. So over a 5-month period, you would end up with a 25%, okay, per month penalty. This is 25% of the outstanding tax bill plus interest. Can be very costly, okay? Can be very costly, depending, of course, on what is that tax bill we're talking about. Good. Now, further to that, once you have gone 60 days, greater than 60 days, this late filing penalty now becomes, listen carefully, either 200 becomes a figure of either $205 penalty or 100%, okay, 100% of the unpaid taxes, whichever is less. I repeat, once you have gone 60 days past the due date, then your penalty in dollar terms now becomes $205 or 100% of the outstanding unpaid taxes, whichever is the smaller number, whichever is the lesser number. Okay, very important. So that is really your penalty for late filing because you had not applied for an automatic 6 months extension to file. Let's assume that you did apply, and so you have averted any late filing penalty. But remember I said earlier on, late filing penalty and late payment of your tax bill is two separate things. So whereas you can mitigate against that penalty for late filing by applying for the extension, that extension in the time to file does not apply to your requirement to pay your tax bill by April 15th. So yes, you went ahead and you filed your extension, and so you're covered, and so no late filing penalty. However, if you have a tax bill, then you're now going to be looking at some interest payment, which is a cost of money. You're holding the people's money. You did not pay it over by April 15th, and therefore the people, we the people, is going to now say to you, I need some interest on this forced loan that you have taken from me. Now, we come to the calculation. When it comes to late payment, your penalty for late for late payment is 0.5%, or other words, half of 1% of the taxes that you owe. Half of 1% of the taxes that you owe. And remember, your interest starts to accrue immediately, the day immediately after the deadline of April 15. Your interest, the interest on that outstanding tax debt start to accumulate. Okay, very, very, very important to note. So there we have a distinction between late filing and late payment, right? Late filing, late payment. Good. So let us say then that you're listening to this video and you realize that, oh wow, I didn't know that having filed for an extension of time to do my taxes does not protect me from any interest on the tax that I owe. Then we're saying that although your application for an extension in the time to file will allow you to go until October 15th, now that you hear me, now that you know, you will want to, as it were, move quickly to see how much of the, and even if you have not yet gone to your tax preparer to know what is the exact figure, but you know you're going to owe some money. You may have a good idea that maybe 2,000, 3,000, 1,500, whatever. Then it will be best for you to even now start to look towards, the possibility of making some payments. Because of course, if you can make some payments now, and as a matter of fact, if you can pay all or even a little more than the tax, since you don't know the exact figure, you may pay close to all or even a little more than what your tax bill would be. It means therefore you would have somewhat limited the period over which interest would have started to accumulate on the unpaid balance. Okay, so very important for you to know that. Very, very, very important. And you will realize, of course, that yes, the interest and penalties that accrue on on these sort of tax debts, whether for late payment or late filings, can be very onerous. They can be very onerous. So what starts out to be a relatively small bill can really mushroom, snowball into something that is quite significant and quite depressing and distressing. So be very careful about that and take heed. Okay, take heed to that. Now, as far as this late filing and late payment is concerned, I just want to say one additional thing is that if you're a person who over the years have seen where you always have a tax debt, you owe a tax bill at the end of tax filing season, especially for those who may have quite a bit of self-employment income and therefore that income is not taxed throughout the year, then what you may want to do, or you should do, or you're required to do, it's recommended and it's a requirement by there, is that you submit what is referred to as estimated taxes. So usually we say you do it on a quarterly basis. So each quarter, there's a sort of look back thing. So January, February, March is one quarter. So in April, you kind of look back to see, okay, what have I done during that month? How much have I earned? What's my estimated expenses? So therefore, what is my estimated first quarter net position? And then you can do, I usually advise my clients, so maybe you could do like, 15% for the federal, 6% for the state, etc. So each quarter, you look at your performance, look at your revenue, look at your expenses, look at your potential bottom line. And on that basis, you can calculate what would be a quarterly tax payment. By so doing, in April, you'd have paid some taxes. In July, you'd have paid taxes for the second quarter. Then in October, thereabout, I think you'd have paid July, August, September, yes. Then in January of 2020, you would have paid October, November, December. You'd have paid on the fourth quarter. So by the time you come around next year, February, thereabout, to prepare your taxes, and if your tax bill comes out to be, say, $4,000, it's highly possible that through those quarterly estimated tax payments, you may have already paid 3/4, 85%, 90% of that tax bill, and so you're just basically paying the balance at tax time. Okay, so again, it's a requirement. I know a lot of us, small business owners, etc., we do not adhere to this, but it's a requirement. There can be a penalty for not doing that, and I'm saying it definitely is beneficial to you, the taxpayer, because yes, at the end of the year you end up paying the same amount, but who want to be looking at a tax bill of $5,000-6,000 when you can, over time, quarter by quarter, make some payments, so that at least, and it's better for cash flow management, because once you can spread your outflow over a whole year, then it helps you to better regulate and know exactly how to manage your cash flow, as opposed to come tax time, you just have this big bill of $4,000. Now, mark you, some individuals decide, no, I prefer to do it that way, and so they may have been putting aside some money. But why put aside the money to pay it all at year end when you could have been paying quarterly, and therefore somewhat avoid some amount of interest, because as you pay down the balance, then of course the interest calculated is going to be, remember now, the interest is always calculated on the unpaid balance. So there's no point in keeping the money at home. If you have it, pay it so that balance go down, so that when the interest is calculated on a month-over-month basis, it is being calculated on a lower number. Okay, and that makes sense. It might not be a lot, but hey, every dollar makes a difference. And so I would advise that we adhere to this quarterly payment, etc. All right, so again, that's about it for now. As I said before, I know some persons may have been misguided, but know that you hear this as a tidbit. It's still time for you to sort of take some remedial action as far as the late payment is concerned, if you know you'd have a tax bill. So thanks once again. This is David Etienne from Etienne's Place. Etienne's Place comes to you each and every week, where we offer tidbits, gems, I call them nuggets, right? Those little bits of information that will stimulate you into thinking, into planning, into strategizing. Again, I said over and over, this forum is not meant to provide any in-depth, rigorous, academic-based kind of information. As a matter of fact, a lot of the things that we present, they can be, as it were, discussed in much greater depth. And this is merely for just information, not tax advice, not accounting advice, not financial advice, but something to help you to start thinking. So if you need more information, of course, you'll be going to your tax preparer, your financial consultant, your accountant, whosoever, and you say, okay, I need to explore this because I hear this little bald man talking about XYZ, and I think it may apply to me, so I need to have a discussion with you, my accountant, my tax preparer, as to how I go about it. All right. Thanks again for joining me at Etienne's Place. It's always a pleasure, and I thank you for the many feedback that I've been getting. You guys have really been supportive, and sometimes I get some questions and I'm saying, "Ooh, I never thought about that." Right? But my clients heard me, it stimulated the thought process, and you came back with me to you came back with some very, very, very thought-provoking suggestions and questions, and that prompts me to decide, okay, what I do next. So God bless. Have a wonderful week. Remember, you need to subscribe to Etienne's Place so that you're kept informed on all that goes on, and you can also access all my previous videos, and there'll be a lot more coming. And now that the tax season is over, mark you, so far we've been focusing on taxes, because hey, at this time, it's just like during Christmas, people don't want to talk about anything else but Santa Claus and gifts and presents and parties. It's natural. So during tax time, I know the focus, the attention is towards tax implications, etc. Nobody have time. But now that tax season is over, we will now spread our wings a little wider to look at other aspects of, yes, taxes, other aspects of business development, cash flow management, business structure, and the thing that I know a lot of people have been asking about and is anxious to know about is this whole issue of IRS representation. as a taxpayer, you want a little bit of understand as to what are your options, what are your rights, how to go about it, how do you determine what to do and what not to do when you have a tax debt and you're getting letters of being threatened with levy, with liens, etc., and you're getting all flustered. Those do not sweat. We're coming with that. I'm going to actually prepare a segment that speaks strictly to the whole provisions of the IRS for those persons who have taxes and all the options that are available to you. And I'll guide you as to how you go step by step to access those potential solutions. So don't sit with your tax debt and have nightmares. There's a way forward. At Etienne's place, Eyeballing David Etienne is going to guide you in the right direction. Okay? So have a good one until I see you in the coming week. Bye.